The Republic report: did Trump manipulate the stock market for personal gain? In a move that raised eyebrows across the political and financial spectrum, former President Donald Trump is being accused of using his tariff policy as a tool to manipulate the U.S. stock market, potentially for personal enrichment. Let's unpack this complex situation from both a legal and ethical lens. Earlier this week, Trump posted two notable statements on Truth Social. 1. Be cool, everything is going to work out well. The USA will be bigger and better than ever before. 2. This is a great time to buy. These posts came just hours before Trump announced an increase in tariffs on Chinese goods by 125%, while simultaneously pausing tariffs on other countries. Almost instantly, markets that had been plummeting rebounded with record single-day gains. Critics, including legal experts and members of Congress, are asking a critical question: was this a deliberate market manipulation strategy? Under U.S. securities law, actions that influence stock prices based on non-public information, especially by those in power, could constitute insider trading. Imagine a CEO publicly encouraging people to buy stock while holding insider knowledge. The SEC would crack down immediately. The same scrutiny is now being applied to Trump's timing. What further raises suspicion is the trading activity that occurred right before Trump's announcement. Analysts noticed unusually high volumes of call options, bets that a stock will rise, being purchased for ETFs like SPY, QQQ, and TQQQ. Some of these trades yielded returns as high as 2,100% within an hour. A single $1.3 million trade on SPY reportedly surged in value to $33 million in just one day. Many believe insiders were tipped off about Trump's upcoming tariff reversal and capitalized on it. There's also speculation that a leaked report earlier in the week, claiming Trump might pause tariffs, was a test to see how the market would respond. Senator Adam Schiff and other lawmakers have now called for a full investigation into whether this was a calculated pump-and-dump scheme. Schiff pointed out that White House officials, including Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer, had just testified that the tariffs would remain in place, only for Trump to reverse course suddenly. Congressional Democrats are demanding answers. They want to know if people within Trump's inner circle traded stocks based on insider knowledge, profiting while ordinary Americans saw their retirement savings drop. With Trump's known ties to his own cryptocurrency ventures and ongoing financial dealings, the questions around conflicts of interest are growing louder. Representative Stephen Horsford sharply questioned Trump's trade team on why close allies like Australia were slapped with tariffs, despite favorable trade relations. Meanwhile, Senator Elizabeth Warren labeled Trump's behavior as corruption in plain sight, and echoed calls for an independent probe into potential market manipulation. White House officials, including Caroline Leavitt, have tried to frame the strategy as part of a grand economic plan, what they're calling the art of the deal. But critics argue this was nothing more than calculated chaos, with small businesses and middle-class investors bearing the brunt. As markets remain volatile, the central question persists: did Donald Trump orchestrate a financial rollercoaster to enrich himself and his wealthy allies, while misleading the American public? At the Republic Report, we'll continue to investigate and report every development. Subscribe and stay informed as we follow the money and hold power to account.